The buy, borrow, die. Secret of the 0.1%. Explained. If you want to be a billionaire, the absolute worst thing you can do is make money. Let me explain. Right now, you are playing a game. You wake up, you trade your time for a paycheck, and before that money even touches your bank account, the government takes 20, 30, maybe even 40% of it. You are taxed on your sweat. You are taxed on your survival. But the top 0.1%, the financial elite, they don't have jobs. They don't want salaries. Because in the upper echelons of the global economy, earning a high income is considered a rookie mistake. In 2007 and 2011, Jeff Bezos paid exactly $0 in federal income taxes. Elon Musk, same story in 2018. How? Did they commit massive Enron-level fraud? Did they smuggle cash to the Cayman Islands in briefcases? No. They did something much smarter. They used a totally legal, perfectly engineered tax loophole designed specifically for them. A three-step wealth generation cheat code that the IRS doesn't want you to fully understand. Step 1, buy. Step 2, borrow. Step 3, die. Welcome to the real rules of monopoly. To understand the greatest wealth illusion in modern history, you have to unlearn everything you know about money. The middle class operates on a fundamental lie. Work hard, earn more, get rich. But the tax code is explicitly rigged to punish earning. The moment you generate an income, you trigger a tax event. The elite know this, so they completely bypass income. They focus on assets. This brings us to step 1, buy. Or more accurately, build and acquire. The elite get their hands on assets that appreciate in value. Company stock, commercial real estate, fine art. These assets are magical because of one simple IRS rule. Unrealized gains are not taxed. If you own $1 billion in Amazon stock and it goes up another billion, you owe 0 taxes because you haven't sold it. It's just paper wealth. But here's the problem. You can't buy a mega yacht or fund a lavish lifestyle with paper wealth. Eventually, you need cold, hard cash. The average person thinks, okay, just sell some stock. Wrong. The second you hit sell, you trigger capital gains tax. You're handing 20% straight to the government. So what do the elites do? They move to step 2, borrow. Instead of selling their assets, they take their portfolio to a major bank like Goldman Sachs or Morgan Stanley and say, hey, I have $1 billion in stock. Give me a $100 million loan and hold my stock as collateral. The bank happily agrees. They issue what's called an SBLOC, a Securities-Backed Line of Credit. And because the loan is backed by bulletproof billionaire assets, the interest rate is microscopic, often 1% or 2%. Here is the genius part. Pay attention. In the eyes of the IRS, a loan is not income. Debt is tax-free. You just put $100 million in your checking account, and you owe the IRS absolutely nothing. Let's look at the math, because this is where it gets genuinely offensive. Say you want $100 million in cash. If you sell your stock to get it, you pay roughly $20 million in capital gains taxes. You lose 20% of your wealth. If you borrow that $100 million at a 2% interest rate, you pay just $2 million a year to the bank. $2 million to the bank versus $20 million to the government. It's a no-brainer. You just saved $18 million by simply going into debt. Larry Ellison, the founder of Oracle, is the king of this strategy. He reportedly had a multi-billion-dollar credit line backed by his Oracle stock to buy mansions, yachts, and literally an entire Hawaiian island. Elon Musk routinely pledges tens of millions of Tesla shares to secure massive personal loans. They live like kings on borrowed money, entirely tax-free. But wait, you're probably thinking, Don't they eventually have to pay back the loan? Sure. How do they pay the interest? Often, they just borrow more money to pay the interest on the first loan. Because as long as their underlying assets, their companies, their real estate, keep growing faster than the 2% interest rate, the math never breaks. The debt is effectively swallowed by the growth of the asset. It is an infinite money glitch. But eventually, the reaper comes for us all. You can outrun the IRS, but you can't outrun death. Eventually, that billionaire is going to die, and those loans have to be settled. If they have to sell their assets after they die to pay off the debt, won't their family get hit with a colossal tax bill? Enter step 3. Die. The ultimate untouchable loophole. Section 1014 of the Internal Revenue Code. The holy grail of generational wealth. It's called the step-up in basis. Here is how it works. Let's say our billionaire bought their stock decades ago for $10 million, and today it's worth $10 billion. That is $9.9 billion in untaxed, unrealized gains. When the billionaire dies and passes those assets to their kids, the IRS does something unbelievable. They step up the cost basis of the stock to its current market value on the day the billionaire died. To the IRS, it's as if the kids bought the stock today for $10 billion. All of those previous gains, the $9.9 billion of profit that happened during the billionaire's life, it vanishes. It is completely legally erased from the tax record. The heirs can now sell just enough of that stock to pay off the bank loans. And because the basis was stepped up, they pay zero capital gains tax on that sale. They keep the yachts. They keep the mansions. They keep the remaining billions. And the IRS gets absolutely nothing from a lifetime of wealth accumulation. So, who pays the bill? A country still has to run. Roads need to be built. Militaries need to be funded. If the top 0.1% are holding their wealth in a tax-free vacuum, the burden falls exactly where it always does. On you, the middle class, the W-2 employees, the people who can't use their house as a hyper-leveraged ATM. You pay 25% on your income, plus sales tax, plus property tax, while inflation quietly eats away whatever you manage to save. The system isn't broken. It's working exactly as it was designed to. The buy, borrow, die strategy isn't a secret whispered in dark alleys. It is the foundational business model of every private bank and wealth management firm on Wall Street. It begs the ultimate question: do we blame the billionaires for playing the game perfectly, or do we blame the politicians who wrote the rulebook for them? Let me know your exact thoughts in the comments below, because I read every single one. But hiding wealth from the IRS is only phase 1 of the elite playbook. Phase 2 is aggressively buying up the one asset you actually need to survive: your home. While you're struggling to save for a 20% down payment, shadow banks like BlackRock are buying up entire neighborhoods of single-family homes with cash, completely locking a generation out of home ownership. How are they doing it? And how can you protect yourself? Click the video on your screen right now, where I expose the dark truth behind the corporate housing takeover. I'll see you there.